Ever seen a candle just leave a gap on the chart and then price come back and fills it perfectly? That's no coincidence. That's what smart money traders call a fair value gap, and they use it to time sniper entries into the market. Today I'll show you what it is, why it matters and how to use it like the pros. So what is a fair value gap? FVG is a price imbalance created by fast manipulation movement. Imagine this, a big bullish candle breaks structure and leaves a gap between the previous candle high and the next candle's low. That means price moves so fast that you're not trades in that zone. No fair value. And what does smart money do? They often come back to that area to rebalance the market and to fill pending orders. To find a fair value gap, look for a 3-candle sequence. The first candle, a capturing of liquidity. The second candle is a huge impulsive movement, and after that the candle will continue its movements. After that the price are going to have a correction or continuing a movement after the capturing of liquidity, for example here. And what zones in between here? This FVG. And one thing to work with FVG, it is you shouldn't trade the FVG what are filled during key formations. For example, the candle can look like where it is not gonna be a FVG, but if you has a gap like that, it is gonna be a FVG. So why FVGs work? Here's why they matter. When smart money pushes the price aggressively and leave gaps because they are not interested in retail liquidity, they're executing volume. But they often come back to these zones to rebalance or to trap traders. Liquidity rests in FVG, market 6 and efficiency. The FVG is like a footprint of smart money when large order pushes price rapidly, there isn't enough time for all buyers and sellers to interact normally. This creates a gap, a small area on the chart where no traders took place, specifically in the 3-candle sequence. So FVG works because we reflect a disruption in the balance between buyers and sellers. When smart money institutions, hedge funds, big players step into the market with huge orders, they don't gradually fill positions, they strike fast. That explosive movement leaves behind an FVG and area on the chart where price didn't trade fairly, and the market by nature seeks efficiency. That means price is likely to come back to that zone to rebalance. But more importantly, smart money uses that return to enter or add to positions. Most retail traders don't see this. They think, oh no, price is reversing, but smart money is just using the pullback to enter again or trap big hands. You will often see the price bust up, leave a gap return to fill it, and then continue in the original direction. That's the signature of smart money move. So let's watch on the formation. You can follow to enter good trades with using of FVG into this candle. But don't think all trades are gonna be successful, because you need to spend a lot of time on the backtest to test the strategy, test it in different ways, in bearish movement, in long movement, to train it, to see it on the different charts. And the first factor you need to see is capturing of liquidity by the candles and sweeping the candles change of the character. It is going to be the fake change of the character. So, and don't forget, in this case we are opening a short deal, and if you are opening a short deal, the all trend are going to be short because we don't trade against trend. So here we can see the fake break of structure. After that our FVG formed 3 candles, 1, 2, 3. Second candle are going to be impulsive movement, and after that we place our zone from the low of the first candle and to the top of the third candle, and it is going to be our point of interest zone, our FVG. After that we are looking for the break of structure to our continue of downtrend movement, and after that we are waiting for the price return to our FVG point. We need to define the 50% of FVG by the Fibonacci grid, and after that you can enter a good short position, and the take profits and stop losses can be different ways. For example, limit orders you can place on the 50% of your FVG, but you have slower chances to get into the deal. But in this case you can place stop loss risky and get better risk threshold if you place it like that. So, and the second way to place limit order is at the beginning of order block. It has a great chances to enter the deal, but the risk threshold are gonna be worse than if you enter from 50%. And take profit you can place on the capturing of liquidity or into another FVG. And stop losses can be conservative. You can place it at the end of the FVG or at the highest point of its formations. At the end of the FVG zone it is risky, and the most risky way is to place it inside this zone, but to define a good place to stop loss, you need to go to the lower time frames and where define the best place to enter a deal. So the FVG formations are gonna look like that. Check out fake breakout structure after the FVG formed with the capturing of liquidity on the top. After that, we are looking for the breakout structure down, what confirm our downtrend movement. After that, we define our FVG zone, place our Fibonacci value to define 30-50%, and we are preparing our deal and wait for the confirming. And now let's go to the real chart example and look to our successful deals. And now let's watch the quick examples on the chart. So here we already can see a good deal with the FVG which are formed here, the liquidity grabs here. It is the most important factor to enter the deal. After that, the liquidation of the retail traders here, filling our FVG, and after that a good uptrend movement with conservative stop loss and risk reward ratio about 1 to 10. If you enter $100 here, you can easily get 1,000. And now here on our FVG formed, we are going to look for the confirmations of it. So here we can see our capturing of liquidity, breakout structure, confirmation of our structure, and after that the price get our deal and we are waiting the successful trades. So here we have a successful trade. If you want to become a successful trader, just follow my steps, my lessons. Don't forget to follow my YouTube channel. For example, here we can see a good FVG to enter a trade, but one trick what I can recommend you is not entry from every FVG you can see on the chart. For example, let's look here. It has a trend movement, good trend movement, but we don't gonna enter here because it has a very bad risk reward ratio, and entering like that are gonna be very risky. And let's watch. So yes, we has a very unsuccessful deal. So and now let's imagine the case where we can see the FVGs. The FVGs, for example, here it is not fulfilled, here it is not filled, here it's not filled, and here it's not filled. For example, here too. To define the best FVG from which we are gonna enter, don't forget what every FVG are gonna enter now, today, tomorrow, next month, next year. Doesn't matter, it is gonna be filled. We need to place a Fibonacci grid. We need to take a Fibonacci grid. The first thing you need to define your premium discount market, about WMI I told you in the previous videos, and see if it has our price. So in a little bit sideways movement in the premium market, we don't gonna enter a long deal the FVGs here because it is very risky. If it has an unfilled FVG here, we need to wait for the price filling them and after that the reverse. So here we can see one FVG and the another FVG. So these two things you need to take in priority because the price here situated in the optimal trading entry point in the discount market and the FVG are not filled. So it is the best way to enter a good deal. For example, if you miss one trade here, you can re-enter here or wait for the another check of the zone. But the second check after the first, it is not checking off FVG, it is checking a liquidity zone here or the block here. The FVG after one fulfilling are not working again. So the price distribution are gonna be like that. So if you liked this video, if you liked my lesson about FVG, drop a like, follow my Telegram channel where I'm gonna drop all the video materials, all the lesson materials, write your comments, and goodbye.